We're going to do a quick recap. Today I took two trades. I lost the first one and then I got stopped out at break even on the second one. And we're going to do just a quick recap of both of those trades, why I took them, what we could have done better, what we maybe did right, and just what we can learn from it so that we can just improve our trading. So today is the 18th. It is Wednesday, February 18th, 2026. So let me go ahead and just quickly show you the trades and then I'll go ahead and start from the beginning. So this was the first trade that I took. This is the one that I got stopped out on this morning at 7:48, and then right after market opened, because for me it opens at 7:30 in the morning. And then this was my second trade a little bit later, about an hour after. And you can see I moved to break even right here at a 1-to-1. And then I got stopped out when it hit break even up here. So let's go ahead and do just the instant bar replay. And then we will go ahead and show you exactly what I did to take this trade. So let's go to market open. All right, so we've got ES on the right side, and then we've got NQ, Nasdaq here on the left side. And if you guys are new or if you don't know a whole lot about trading, I trade Nasdaq futures and sometimes ES futures. I trade ICT concepts, so lots of like liquidity sweeps, lots of fair value gaps, sometimes like a breaker or like a breaker block or like an order block or equilibrium, stuff like that. So I'm going to be talking a lot about that stuff. If you don't know what I'm talking about, leave a question down in the comments and I'll try and respond to you, and I'll try and help you the best I can to understand, because I understand that learning trading is definitely hard, especially when somebody is basically speaking a whole nother language to you. So I totally get that. I was there. I've been trading for about a year and a half, coming up on 2 years now. And when I first started, I thought they were literally just trying to confuse me and just speak different languages. And I was like, what the heck? So, anyways, if you're confused, just pause it, go look up the word, go look up a picture of what it looks like so you kind of understand what I'm talking about. And if you also don't know, you could just leave a comment down below and I'll try and get back to you guys. But anyways, let's get started. So like I said, today was Wednesday. I took two trades. The first one, this is how it looked. So I've got this filter here, or this, not filter, this indicator here. I turn it on and I see that right as market opened, we were just about to sweep London lows and Asian lows were just below here. So same thing on ES over here. And I was like, okay, well, let's see. We could either take longs off of a liquidity sweep of London lows towards up here, or we can kind of do a top-down analysis from the high time frames. So I like to start on the daily, sometimes even the weekly. And I mentioned in a couple videos ago that I think on Nasdaq we want to come down and take out this low. So I'm pretty bearish. That doesn't mean I'm only going to take shorts, but I would prefer to take shorts. And we can see here that on, let me go ahead and just change that. Okay. We can also see here that on the daily time frame, we are actually coming out of a daily fair value gap, a bearish fair value gap. So we're using it, we're respecting it, right? And I really liked that. However, we had already tapped into it. It was actually on ES. So let me go ahead and show you that. This is everything that I was kind of going through this morning as I was getting into the trading day. So here's that same daily fair value gap. And let me go ahead and mark it out. Okay, so there's the fair value gap on both ES and on NASDAQ. So the London session overnight actually hit that fair value gap on ES, but we never got into it on NASDAQ. So in return, what happened was we created an SMT divergence. And that is where one takes out a high, like this one right here took out this high, and the other one doesn't. So that tells us that NASDAQ failed to take out that high, but ES did, and that is a confluence that tells us that the market wants to go down. So let's go ahead and mark out this one here. I know it's not perfect, but you get the idea. So we took out the high on ES and we did not on NQ. And so that right there, the fact that we tapped into a daily bearish fair value gap, and my overall idea and bias is shorts because I want to go towards that weekly low that I marked out down here. I like that SMT. I'm like, okay, sweet. However, this is where I messed up well, not necessarily messed up, but this is where it's hard to figure it out because you don't want to just take a short just from that, right? You want to wait for something to show you where it wants to go, right? If you want the market to go down, it has to go up first and grab some liquidity and some momentum to do so. So I thought either maybe we come up into one of these 5 minute gaps that we have here right at market open. We've got these gaps here. They're kind of a couple overlapped, and then we also have these two BPR gaps right here that used this. I mean, we wicked into it and went down, so we're pretty bearish. And I was looking at shorts. Hopefully, we didn't take out London lows, but we can see we quickly took those out at market open, and then we went up into these gaps. And this is where it was kind of deciding where it wants to go, right? If we start invalidating these gaps and we start pushing past them and closing above them, that tells me that maybe we do want to go into this daily fair value gap first before we start going down. But if we use these gaps to go down, maybe we can find a short towards Asian lows, right? We've got all these lows stacked on each other right here, kind of equal lows. So there's a lot of liquidity, sell side liquidity down here, and I was looking and hoping for a short right here out of this gap. So we got a little 5 minute manipulation on these highs right here. Same thing on ES. Let me go ahead and just zoom in a little bit over here. So the same exact thing. We're in that same spot, the little, fair value gaps stacked on top of each other. And then let's zoom into the 1 minute and zoom in just a little bit more. And it starts to actually use the gap and go down. And right there on this candle, I actually chose to take a short. So it looked something like this. I didn't put my stop above everything, but it was about right there, I think. And I was going to move to break even here at the previous lows that we just hit. And then I was going to try and target Asian lows for my entire trade, right? That's what it was going to look like. And that's what it looked pretty good for the first couple minutes. However, we ended up getting stopped out after just 2 or 3 minutes. This trade right here, I think the only thing that I did wrong was the fact that I just took a short right after we swept a significant low. In this case scenario, it was the London low. Does that work sometimes? Yes. Sometimes we sweep the London low, we go up a little bit, retest, and then we continue down towards the Asian lows, which is what I was hoping. But it probably would have looked a little bit better if, for example, we created like a little bit of a fair value gap, like right here, out of all of these bullish candles. If this was like one bullish candle and we pushed hard down through it, that would have looked a lot better than this entry that I took, right? This entry is just a big bearish candle. There wasn't really much conviction behind it. That's not really telling me just because it goes down doesn't mean it's going to go all the way towards Asian lows, right? But if it goes through an entire fair value gap, like if there were to be one here, that would look a lot nicer. So this morning, I think I could have done a lot better with that trade. I had the right idea, but it could have been a little bit better, right? And so that's where if we're grading this trade, it probably wouldn't be an A plus setup. I would say it's either like a B plus, something like that. So it's good. It's got the right idea, but it's not great, right? And so, anyways, there was that trade. We got stopped out there. And let's fast forward to my second trade now. So this was a few minutes later. We start going all the way up, and we actually took out all these highs, which it's hard to see the market go up like that, but there was no setup for me, right? I didn't see any good setup to enter into this trade, and overall, I'm in a short bias. I'm in a bearish bias today. So we go up and we finally get into this daily fair value gap on Nasdaq, which I also like because there's a lot of liquidity up there as well. So this is where I looked at the 5 minute and I noticed I'm going to move these gaps over here. There were a couple 5 minute fair value gaps that we started forming on the way up. Okay. And I like to see unmitigated fair value gaps. And what that means is just a fair value gap that has not been touched yet. If it hasn't been touched, this one has been right here with that little wick, but this one didn't. This is an unmitigated gap. And those are very sometimes they kind of act as magnets for price. Price wants to come back, rebalance the price action in that zone, and then use it to keep going up, right? There's a lot of orders that it can grab in that area. So I was hoping for kind of a little bit of a pullback, I guess, like this or this, but we didn't get any of those, which I'm totally fine with because, like I said, I didn't want to take a long. But what happened was, if we zoom into the 1 minute, this is where I was excited to take a short because we're delivering out of a daily fair value gap. There's a lot of liquidity, right? Like overall, the big time frame, we're in a short mindset or a bearish mindset. So right about, I think it was here. This was, I believe, the trade. Yes. So I thought right here we were going to come down and take out all of these, take out this low. So let me explain a little bit more. This was where I entered on this bearish candle. I put my stops above all of these highs, about 25 points. And I was hoping that we would come and take this low right here. So this is about a 1 to 2. You can see a little 2.08, 1 to 2 RR trade. And what happened was, if we look at the 5 minute, I noticed that there was this gap that, yes, we touched, but there's still a lot of part of the, or a big part of that gap that was left untouched. And if we even go to the 15 minute, there is all of these. There's a gap right here, and there's another one down here. So there's a lot of liquidity down low that we could take. However, just because this is a risky trade, a risky short, because there are so many gaps that I would be front running, meaning if price gets into that gap, it could easily just flip and keep going up. And so all I want to do is target the first gap for a take profit, which would be this one right here that I marked. And it also goes or coincides with this low that we put in right here. So hopefully that makes sense. This is why I took this short. I saw a little, wasn't the craziest thing, but I saw one little break of structure on the 1 minute right here, a little kind of CISD, which is change in the state of demand, which basically just means the market has broken structure to the downside. I thought that looked good. I thought that it was time to deliver out of the daily fair value gap down towards all of these things that I wanted, but it didn't necessarily get there. One other reason I chose to take this trade, and this is something I need to study a little bit more, is if we go to the high time frame, this is where we're delivering out of not just a daily fair value gap, but a huge 4 hour and a huge 1 hour gap. And let me know if you guys know more about this than I do, but I believe the last leg up, which is all of this right here, acts as like an order block or something like that. And so in my mind, this level right here from that wick and that whole leg up kind of acts as like a support and resistance zone. But if we're talking ICT concepts, I believe it is an order block of some sort. So that's also another reason why I wanted to take a short up here so high. So let's go back down to the smaller time frame. Again, I think this was very similar to my first trade. There wasn't much evidence that the market was going down yet. Yes, I saw a little 1 minute break of structure, and yes, there was this gap down here that I was targeting for a take profit, but it wasn't anything crazy, right? I would definitely not grade this trade an A plus either, because it was just a little risky, right? We just went way up, and yes, when the market goes up a ton or down a ton, it tends to rebalance a little bit and have some pullbacks. And I was basically trying to get one of those pullbacks, or I thought the market was completely flipping and going down from this big daily fair value gap. When I entered this trade, I decided to move stops to break even at this low, which it actually, I entered about right here, a little bit higher, because this stop was almost exactly a 1-to-1 risk to reward ratio. And we ended up hitting the break even right here. So I moved my stops to break even. So it's a free trade. I don't lose anything now, because from the first loss that I showed you, I was already down $655. And that right there is kind of the most that I want to risk in a day. That's just where I'm at with my account. Everybody kind of risks different size, but that's just what I'm comfortable about, $500 to $700 going for like $1,000 or 1,200 or $1,300. So, anyways, I was already down 655 bucks, and I told myself, okay, well, if that's the case, I'm willing to take another trade, but I don't want to risk as much, or I want to look to move to break even as soon as possible because I want to protect my capital. So that's what we did. We moved to break even at this 1 to 1, and I was hopefully targeting this down here, which is a little bit more than a 1 to 2. It was a 2.2 trade, and right after we hit break even, we decided to go back up, and I got stopped out right there. So I actually made like a couple bucks on this trade just because I put my stop loss right above, or I guess right below where I entered, which is smart because there's always fees. If you are taking a trade, there's always going to be a fee. I don't know exactly how the fees work. I don't know how much it is, but I know it's just a few dollars. So if you're ever moving to break even, just make sure you move like 1 point or a couple ticks down below it or above it, whether you guys are in a short or a long position. So that's just something I've learned. So, you know, it helps. I mean, it's not something you're ever going to make money off of, but it's just better to stay positive on a break even trade than negative. So, anyways, the other thing that I think I could have done better on this was I feel like taking a 1 to 2.2 trade here is a little bit more on the greedy side. I could have taken profits here, right there, which I know it says 0.79, but I entered somewhere up here. It was a little bit bigger of a trade, and it was a 1 to 1 RR. But the trade would have looked like that. I could have taken profits out at a 1 to 1, and instead of losing $655, I only would have lost like 250. It would have been about $400 win. But I think the only explanation I have for as to why I didn't take my profits out there was because I just was getting greedy, and I was literally looking at the red number on Trade the negative 200 whatever, and I told myself like I don't want to leave on a negative number. I think the market will go down, or it can go down. Let's try and ride it out. And so that right there is evidence that I got a little greedy, and I could have taken some profits and only been negative 250 on the day, but instead I got a little bit greedy and I just moved to break even, which isn't a bad thing. You know, I still didn't lose anything, but it could have been better. If I were trading micros, this is when it's nice to trade micros because I could have taken half my position out, right? I could have taken like, if I'm trading 10 micros, maybe I take like 6 or 7 or 8 micros out at that first 1 to 1 right here where it was the break even, and then let some runners go down here. The hard part about that is usually when you're doing partial profits, it tends to not make you as much money that you could, obviously, if you're holding all of them down to the full take profit. But that's just the way trading works. And so today was a losing day, but I am glad that I controlled myself after these two losses. Well, this was a break even trade, so one loss and a break even. I was feeling extremely like antsy to want to get into another trade. I was like, okay, well, if it's not going down, it's just going to keep going up, and it's going to do the little just normal trend looking trade, right? And I told myself, like, if that's the case, I might as well just wait for a little pullback and then trade out of it, something like this, and just catch along, which I got really close to doing, and I almost let my emotions and greed get to me in a little bit of revenge trading. But if we look back, there is like nothing to target for a take profit. The nearest take profit, I personally like to target significant highs and lows. It would have been all the way up here if I can get it, something like that. And that is just a ridiculous trade. Like that's 350 points. We don't want to do that. And so I told myself, even though I was really feeling like I hate leaving on negative days. I hate looking at a red number and being like, all right, we're done for the day. Good job. Because that's where trading gets to your mental, right? It gets to your, or sorry, your mentality. Every other job in the world, you get money from, whether you're working hourly or you have a salary or whatever. But the harder you work, usually you get paid for it. But I feel like I worked hard on this. I had some hard decisions to make this morning with these two trades, and I decided to trade twice, and I ended up losing money, right? This is like one of the few jobs, if not the only job in the world, where you have to be okay losing sometimes because it is inevitable to lose. Like you're going to, and you have to know when to walk away. And I told myself after I wanted to take a third and fourth and fifth trade, I was like, you know what, just be done. Like I don't know exactly where the market wants to go right now. It's not showing me it's wanting to go down, and it probably is just not a good idea to take a short because there's all these big gaps that it could easily flip on me, right? And so I had to make a little bit of an executive decision today for myself, my trading business, and I just decided, you know what, let's just take the $650 loss and just leave it. I set a couple alerts on my phone. I went to class after. Sometimes I trade the PM session, but I did set a couple of alerts on my phone in a couple key places, but they were like hundreds of points above and below. And I told myself, okay, if we come up all the way up here in the next hour or two and sweep this liquidity, then I'll hop back on and look for a trade. Or if we come all the way down here and sweep this significant spot, maybe I'll hop back on and look for a trade. But my alerts never went off, so I just didn't trade the PM session today. And I feel like, yes, I only took a couple, maybe B plus trades this morning, these two shorts. They weren't the best, but what saved me was my mentality, my psychology, and a little bit of risk management. I didn't like over risk on these. And so I feel pretty good about today. Obviously, there's definitely some learning lessons. Again, if you guys have any questions, drop it down in the comments. Let me know what you guys think about how I've been trading. If you guys have any tips for me, let me know because I'm just trying to learn as much as I can. And I mean, we'll just go from there, right? We're just taking baby steps. Becoming a consistent, profitable trader is one of the hardest, longest, and most patient journeys out there. It's one of the few jobs where you will just sit there and lose and lose and lose for months, years, until you actually get the hang of it. Most jobs aren't like that. Usually you go through training and then you start making money, or you're even making money while you're in training, right? This is not like that. This is one of the things where it feels in here like you are just losing and you are just going downhill, but really it's a steady kind of goes like this uphill. So it takes time. I'm not super worried about today. They weren't the best trade setups, but I think my psychology kind of saved us and we made some better decisions towards the end of the trading day. And we'll be back on the charts tomorrow. Tomorrow is Thursday, so I believe let's look at the economic calendar real fast. Tomorrow we've got a red news folder event at 6:30 in the morning, a couple orange folders which don't really do much, and Friday should be another good trading day. So we got two more trading days this week. Hopefully, we'll find something good. If not, we'll just be patient and just wait. Put our hands under our butts and just wait because that's what TJR says and that's what we got to do. So, anyways, hopefully this helps you guys. It's definitely helping me. Like I've said in my other videos, I'm just treating this channel as a journal, like a backtesting visual journal, going over all my trades, thinking about every decision that I'm making, and just as it's helping me, I hope it's helping you guys. So, anyways, I'll shut up now and I'll see you guys in the next one.